Hi guys, what is going on and welcome to today's YouTube video. In today's video, we are going to discuss my plan for Bitcoin for the upcoming months and years. I'm going to review my high time frame plan, my high time frame scenario that I'm currently looking to play out in the upcoming months, my reasoning behind it, and more. We are going to discuss the chart of Bitcoin, but I will also be discussing the chart of the total crypto market cap, which is validating my idea that I will share with you guys in today's video. When we are looking at this chart of Bitcoin, the first thing that we have to determine is the range, because all of this price section that we are seeing over here is range trading. It is range bound, it is trading in a massive range, and I don't think that enough people are looking at the range that I will be showing to you guys today. I think this is one massive accumulation range before we are going to start off the newest rally towards new all-time highs in the upcoming years. So what range am I talking about? I'm talking about the range from this high with this as our range low over here. Why is that? Because first of all, this is where we had our first bounce after this massive crash. Okay, so the top of the bounce can be marked as our range high, and before we start a new drop off, the first bounce after that massive drop off can be marked as a range low. We can also see that the mid range over here is perfectly being respected to the dollar accuracy multiple times. And that respect of the mid-range is extremely important to call it a valid range. And we are seeing that, and that is exactly what we want to see. Now, which is also validating our range, is that if we are taking the quarterly levels of this range, so if we are going to insert our 0.75 level and also our 0.25 level, we can see that also those levels are being respected beautifully. So we can see support over here around that quarterly level, right? Then we see massive resistance multiple times over here around that quarterly level. At the bottom of the quarterly level, around the 0.25 level of this range, we can see huge respect all the time for that quarterly level. So many times it was acting as perfect support and resistance for the Bitcoin price, and that is exactly validating our range. Now, why is this range helpful to determine my current scenario for the Bitcoin price? Well, we have seen a beautiful deviation of the range low over here. Why did the market maker send the price here? Because below the range low, we know that there's massive amounts of liquidity resting. And they use that liquidity to fill their own buy orders, to fill their own spot orders, but also to fill their own long orders. Because we know that the market makers and the big whales with the big amounts of money need a lot of liquidity to fill their orders, and that takes time. And that is why we didn't see a quick wick before reversing. No, we saw accumulation going on by sideways movement before starting this rally upwards. Now, where are those market makers looking to sell their bags? They are trading the range. So the first level where they are looking to sell their bags is the mid-range. Because after deviation of the range low and a strong reclaim of the range low, which we saw, we are targeting the mid-range. That mid-range got tagged, and you can see that market makers unloaded some of their bags over there. They bought back over here. And what should be their next target? After reclaiming the mid-range, which we did over here, after first finding some resistance, obviously first, they are targeting the range high. After a deviation of the range low, you should target a deviation of the range high. Now, most people say that this is our range high, but I don't think so. I think this high over here can be marked as our range high. So that is also the liquidity area that I'm targeting for a potential new deviation. So we are going to extend this a little bit to the right. We can see that this box over here is now where the most amount of liquidity is resting. And that should be our target to take profit from the spot positions that we have been buying over here and from the long positions that we have been building along the way towards the upside. Because that is exactly what I think the market makers are doing. Now, After reclaiming this mid-range, we haven't seen any retest of the mid-range. And that is something that I think is likely to occur before targeting the range high. I think, personally, before targeting this liquidity above the range high, I think it is likely to see a potential retest of the mid-range. It might be a slight front run of the mid-range because everyone is looking to bid the retest of those previous resistance levels. So maybe we get a front run, or maybe we go a little bit below and reclaim it over here before sending it towards the upside, towards that range high. And that is where it becomes interesting, because as soon as we break that range high and price, if I once again extend it a little bit more to the right, starts consolidating above that range high, people will start to get extremely bullish. But instead, this consolidation area is very bearish. Because if it starts consolidating over here, just like it started consolidating over here, I think that is a massive sign of distribution that will be going on by the whales and by the bigger players. And that is the time to start building your swing short positions, because that is exactly what the market makers will do. There's a lot of liquidity resting over here that they can use to sell their spot positions and to open swing short positions. But on top of that, the retail traders will think, okay, we are seeing consolidation above the previous highs. We are targeting new highs because consolidation above resistance is bullish. Now, in my opinion, consolidation within liquidity areas after a strong move towards the upside isn't bullish, but it's actually bearish. And that is exactly what I will be targeting over here. So, sum up, we want to see a retest of the mid-range to fill our swing long orders, reclaim it, send it towards the range high, wait for the deviation to occur, maybe form some kind of a 3-drive pattern or some kind of a massive bullish divergence before getting the mid-term crash. Now you're thinking, a mid-term crash? After such a strong move towards the upside, we are going to new all-time highs, right? No, we are not. This over here will be the biggest bull trap. Will we go towards new lows from there? No, we won't. We won't go towards new lows. But you do have to keep in mind that over here, around $20,000, is where we have an unfilled CME gap. And I expect that CME gap to be a big draw on liquidity and to be the ultimate target for the whales to accumulate their positions after getting that midterm crash before sending it towards new all-time highs. A trigger for this midterm crash towards the end of the summer, towards the end of the year, could be a potential recession looming in America. Everyone is expecting that's a recession to send it towards new lows. I don't think it will. You're probably wondering, why don't you think that the recession is going to send us towards new lows? Because you really think and believe that the recession is worse than the Luna crash and worse than the FTX crash for the crypto industry? If you think so, I think you're not going to make it. Yes, it can cause a crash on the stock market, and that will have a bearish effect on Bitcoin. But is there anything worse than one of the biggest exchanges and one of the biggest projects completely collapsing within an industry? There isn't. There's nothing that will make the people that holded their Bitcoin along this crash over here with Luna and along this crash with FTX, there's nothing else that will make them sell their Bitcoin until it reaches their target. These were the guys with the diamond hands. These were the guys with the proper vision of new all-time highs for Bitcoin. And you really think that a temporary recession will make them sell their Bitcoin after they hold it through this crypto winter, after they hold it through this massive bear market? If you think so, once again, you're not gonna make it. But I do think that we will see some kind of a crash. And probably we will see that crash after this deviation over here. If that happens, honestly, I think I have played this bear market almost perfectly. I don't think I could have played it any better on the higher time frames. I predicted the Luna crash. I predicted the FTX crash. Did I predict that these fundamental events were going to happen? No, I didn't. I just looked at the chart and tried to find what the chart was trying to tell me, and it was telling me that two big crashes were looming. It happened I played it perfectly. Now let's see if also this high time frame scenario that I'm drawing is also going to play out. It might not play out, but this is what I'm expecting and this is what I'm going to try and trade. Bear in mind that in between this, so many things can happen and there are so many opportunities laying around the corner. Even if these scenarios don't play out, I will find a way to make enough money. There's no doubt about it. But if this plays out, and if I can sell my spot around this area over here, and if I can buy back my spot around this area over here with a potential retest of the quarterly range or a potential retest of the range low, before sending it towards new all-time highs for the Bitcoin price, I don't think I could have played it any better. Let me know your guys' thoughts about this scenario for the Bitcoin price. Let me know if you guys have any questions. Make sure to follow me on Twitter, join our free Discord, subscribe to our YouTube channel, and please guys, smash up the like button and share this video with your friends. It would be very much appreciated. Thank you guys for watching, and I'll see you guys on Monday's video. Ciao, ciao!